2025 starts with one set of tax rules, but there definitely could be major changes that happen before the year ends. Most of the provisions from the Tax Cuts and Jobs Act that Donald Trump put in place when he first took office are set to expire this year, so I want to go through some of them to update you so that if any of these affect you, you know how to handle them. Hey, my name's Matt, and I'm a CPA, and I run a firm called TrueBooks that specializes in tax and accounting and tax planning for real estate investors and small business owners. And some of the things I'm going to touch on in this video are the largest topics that I think would be most applicable to you that you should expect in 2025. And in this video, I want to talk about some of the changes that you can expect to see in 2025, some specific ones such as digital asset 1099s from your brokers that are holding your cryptocurrency, capital gains rates, standard deductions, and things like that. Now, as I said, most of the Tax Cuts and Jobs Act provisions that Trump put in place are set to end in 2025. Now, we know Trump has made taxes a huge item on his legislative agenda, and so here are some of the things that we're hoping could be overturned or potentially kept in place if these changes go through. So let's talk about these things in more detail. Now, I think you can expect to see some of these details on tax changes happen in the back half of 2025, and any potential tax changes are likely going to happen prospectively starting in 2026, but hey, you never know, and if you can, I would likely wait to file your return just to make sure no changes happen retroactively back to 2024, which could definitely help you if you put a new rental property in place or you had something to bonus depreciate, whatever the case may be. But it's likely that we'll see these changes take effect, see the details at the back of 2025, and then they'll start in year 2026. First, let's talk about 1099Ks. These are the forms that you get from your vendors or merchant processors like Venmo, PayPal, Square for doing transacting with your customers, but it's their platform that you're using to collect payments. Now, the rule in place from 2021 was enforcing these companies to issue you a 1099K if you received a payment in excess of $600. The old rules were if you had more than 200 transactions or more than $20,000 of receipts through that platform, then they had to issue you a 1099K. And so the new rules were slated to begin in 2022 with 1099K forms sent out in 2023, but they got a lot of flack, so they kind of reeled this back. So the IRS is phasing in the dollar threshold for filing the forms, $5,000 for 2024 for 1099s sent out in 2025, and $2,500 for 2025 with the forms being sent out in 2026. So for 2025, the threshold for this 1099K form is $2,500. So my tip here with a form 1099K is to make sure that the number that comes to you on your form 1099K is at least equal to or higher, most of the time, than your revenue amount on your profit and loss. Think about it. If you receive a form 1099K saying you received $20,000 in customer payments, but your profit and loss only says $10,000 on the top line for revenue, there's a bit of a discrepancy there. We've seen clients get selected for examination in the past due to this, so it's something to watch out for. Digital assets. Yes, this is speaking to my crypto bros out there. This specifically in 2025 is a new rule, and brokers are now going to be issuing Form 1099s for sale transactions at the brokerages where you hold this cryptocurrency. This law requires brokers to report sales price, tax basis, and other information on these digital asset trades. So the reporting was slated to begin in 2023, but the IRS delayed it. Reporting of sales proceeds starts with 2025 forms. It's a 1099-DA that brokers will send out in 2026. So again, for the 2025 year, but in 2026. Now, decentralized crypto exchanges are required to start reporting sale transactions in the year of 2027. And now the reporting of these decentralized transactions will have tax basis and character of gain, such as short-term or long-term. That begins in 2026 on Form 1099-DA, which will be issued to you in 2027. So what you have to remember when it comes to digital assets in 2025 is that brokers will start reporting sales of these assets on Form 1099K that you will get in 2026. But remember, those are for sales that occurred in 2025. Now, when it comes to tax brackets, they did become a little bit wider in 2025. Remember, these balances are adjusted every year due to inflation, unless there's any other major tax changes, and the rates have stayed the same. So now we're still dealing with the following rates: 10%, 12%, 22%, 24%, 32%, 35%, and 37% at the top bracket. Now, one quick note to mention here when it comes to tax brackets, one of the biggest misconceptions is that once you earn an amount of money and you're in that bracket, all of your income is subject to that tax bracket and that tax rate, and that is not the case. Remember, we have a progressive tax system. So as you make money and earn your way up the bracket, you will only be hit with that amount of tax on that bucket of income. So for example, if I take a married couple where their taxable income is $220,000, they are in the 24% tax bracket, but they're only going to pay 24% on the amount over $206,000 up to $394,000. So you'll see that depending on where you fall in the bracket system, you owe an amount of tax. Now, when it comes to capital gains, again, the amounts for these different rates has changed, but the rates themselves have not. We're dealing with 0, 15, and 20%. So yes, if you're a joint married couple and your income is $96,700 or less, you're technically taxed $0 of capital gain on any of that amount. Now we have IRAs and retirement plans. And remember, when I look at tax planning, I look at it in sort of three segments. One, reinvesting into your business, driving down the net income, right? The more money you spend in your business and reinvest, the lower your ideal net profits would be for future growth, obviously, right? That's why you're investing the money into the business, is for future growth. But for a tax strategy, spending money is great if it makes sense. Two, we have retirement. This is a huge segment of tax planning. But for most small business owners and newer business owners, they'd rather use the funds and put them back into their business to refuel the growth. But for people that are in the retirement phase or accumulating and sort of building those reserves for retirement, here are some of the changes here that are relevant to you. First, we'll go over 401ks. So for my employees here that participate in maybe your employer plan where you work, or if you run your own business and you have your own 401k plan, your contribution limit now for your deferrals, money that you put in the plan, is now $23,500 for the year. And as far as IRAs, individual retirement accounts, both traditional and Roth accounts, that amount has stayed the same at $7,000 is your contribution limit. Now, for my people here that are interested in doing Roths, Roths are great. Roth-style IRA or Roth-style 401k accounts are the best because the growth that you earn within that account is not taxed when you take out those proceeds if you obviously follow the rules of having a Roth account. So think about it as you're taking the tax hit now, meaning you're not getting a deduction for the money that you're putting in the account, but the money is going to grow tax-free so that ultimately when you take distributions, you pay no tax on them. And so the income ceilings here for Roth IRAs are growing a bit higher. Contributions phase out with adjustable gross income at $236,000 to $246,000 for couples and $150,000 to $165,000 for single. Now let's quickly talk estate and gift tax. Most of you may be familiar with the gift tax on the how much money you can give somebody for free without having to pay tax on it, neither you or them, within a year. And that amount has risen to $19,000 per donee. So technically you and your wife could each give $19,000 to the same person and you nor them would have to pay tax on that. And that is bumped from $18,000 last year in 24 now to $19,000 in 2025. And now the lifetime estate and gift tax exemption for 2025 has risen to $13,990,000. So think of it as this is your bucket for your lifetime, and as you give away money, you can take it against this bucket that you have. But keep in mind that $19,000 threshold doesn't trigger anything of you needing to take it away from that bucket. It's as soon as you give something to one person over that $19,000 that it starts to go against your lifetime exemption. Now, a little bit on healthcare. You should watch out for health savings accounts. These are great ways to save on taxes and also be strategic with your health spending. Because again, the money that you contribute to these accounts is tax deductible. You get to use these funds on some day-to-day items, hygiene products, things like that. And again, it's a great way to help save on taxes. The annual cap on deductible pay-ins to health savings accounts rises in 2025 to $4,300 for account owners with self-only coverage and $8,550 for people who have family coverage. So this does depend on the type of coverage you have with your health insurance. And now remember, the eligibility for HSAs is restricted, and you have to have a high deductible health plan in order to qualify to have one of these plans. Moving on to payroll taxes. Payroll taxes are a pest, especially if you're a business owner, because now that's something that you have to juggle while maybe hiring contractors and employees, but also hiring yourself as an employee if you're running an S corporation, for my S corp owners out there. The Social Security annual wage base for 2025 has bumped to $176,100, which is about a $7,500 increase. Now let's talk business taxes, specifically depreciation. For those of you that remember, with the Tax Cuts and Jobs Act, that brought 100% depreciation back in 2022. And since then, we've been phasing out 20% each year. And now in 2025, we are in a 40% year. So it's not worth as much, but it's still a great tax strategy. But now remember, there's a potential to expense the item versus depreciate the item, and that's through Section 179. And you're looking at two different code sections. You're looking at bonus depreciation or Section 179 expensing. So remember, talk with your tax planner and see what's most optimal for your situation. Because remember, expensing, that limit is a lot higher at $1.25 million. Another business item is pretty big: qualified business income deduction. This was a deduction, again, from the Trump era, the first round, where it gave small businesses and pass-through businesses a 20% sort of shave off the top. And this is important because there's phase-out limits for businesses to use this strategy or to be eligible for this strategy. And so those thresholds have moved up. So remember, you have to juggle where you're at in the threshold to see if you qualify for some of these strategies. And last, we have mileage. We're up to 70 cents per business mile. And my tip here is that any time that you are going to use vehicles as a tax strategy in your own case, make sure that you're tracking business miles and total miles for the vehicles that you use within your business. Especially if you're using a vehicle for partial personal use and business use, it's important that we know how to run the math to determine what portion of the vehicle's cost or what miles you're eligible to deduct so that we can come up with the biggest deduction for you. So always track miles. Overall, 2025 is going to be a tumultuous tax year. There's a lot of potential changes coming up. We're dealing with changes from the past that are set to expire. And so there's a lot in the air right now. And I think the best thing you could do is go off the rules that were in place for 2024, get your tax planning going, understand how you're going to file that return, and then take a look at 2025 and the rules that you have now to try to come up with the best game plan that you can. But keep in the back of your mind, these things may change. And again, if you ask me, I think that the rules are going to change going forward, starting in 2026. I think we'll get some of these details back half of 2025. But again, you never know. So if you have your return and everything's prepared and ready, maybe you sit on extension throughout the summer and just see what trickles in as far as the news goes, because you'd hate to have rules pass retroactively back to 2024 that would benefit you, but you've already filed the return and now you have to go back and amend, and it would just cause a lot more headache. So if you ask me, get your documents in order, prepare the return, wait on some news, and if not, click file. And be ready for these changes to happen back half of 25, starting 26, so that you're ready for them then. And as always, if there's anything specific that you want me to answer or talk about on this channel, please feel free to drop a comment, and I'd be glad to go over it. Thanks. Cheers.